All right, we are about to bring in Chart Trader. We're going to have a little discussion here today as to what to make of all this market activity. And Brett, I have a very true story for you. My first trading manager once told me, actually the very
Well,
first day I ever started trading, he said, trading should be the most fun thing you can do with your pants on. And this is anything but. These headlines that we're seeing, the market moves just out of the blue. Are you having fun?
yeah, totally, actually. And my pants are on,
Good.
just just to clarify.
So anyway, so we drug you out of some undisclosed location out in the beach somewhere where you were on vacation. But if there's one thing you can't say about us is that we are not dedicated to our listeners, and we're here to give you some color. So, Brett, what
Yes.
is your takeaway now, man?
First, I want to clarify on the recent tweet, and this is kind of the drama for the day is now set up around this point, I would say. So just just to basically state the obvious, the president cannot hereby order private companies or private citizens to do anything at all. We hire or fire the president. We pay the president's salary. We are the president's boss. We can hereby order him to do things. It doesn't work the other way around because this is not, in fact, a dictatorship. So that's point number one, and it's a biggie because now some other announcement has to happen from the White House that makes sense of that insane rhetoric in a way that suggests a policy response that means that those words have some kind of meaning. And that's got to be a pretty big announcement. I would think that to justify saying it that way, using all the tools that they have, they would need to be coming up with something pretty dramatic later today. Now, maybe it's just words, but I would think that type of verbiage can backfire big time if it's not backed up by something that looks like those words didn't have to do with somebody who just believes he can just stand there and order private citizens and private companies to do things. Because that's not a good look, I think, for a president in a democracy. So I think that he would need to have a very specific policy tool that he had in mind that means that he wasn't just ranting. There's something that the White House genuinely has the power to do that enforces that kind of statement. And the only thing that I can think of, because they're running out of tariffs, I mean, unless he just were to go up 50% on tariffs on everything, there would be some kind of like partial embargo. I don't know. But it would have to be something pretty darn consequential. So I think that the market is now in this state of uncertainty around the expectation of some further thing that's going to justify rhetoric like that. And yeah, I mean, I thought today was important because of the Fed. And obviously, that's not the case at this point. Powell said nothing important. If anything, the only thing that I saw from Powell that mattered at all, really, is when he characterized the recent history and he was willing to use the term the new normal for what we're seeing now, which suggests that, and his discussion about R-star, which suggests that there's something going on now that typical normal monetary policy tools don't seem to be able to address. And I think the market was waiting for some kind of admission of that from the Fed because it means that there's got to be some additional policy creativity. This isn't just going to be, rates to the effective lower bound and then some form of QE, that there's got to be something creative happening here. And like I've talked about for a while, policy creativity is probably going to be called for in this phase of the game, and that has some people probably pretty on edge about the value of all sorts of things. So, but otherwise, that was just a blip, and otherwise it was just there was nothing to it. There was nothing to Powell. So I was waiting for something a little more clear. I think he did announce an easing cycle for what it's worth by saying that at each step of the way we'll do what's necessary and that there are more significant risks. But again, that's faded to the background now. China first, now Trump, and Trump on the way again. So I think that that's going to define the day and the week and the month.
Well, talk about words that may come back to bite him.
Yeah.
Here's, did he seriously just compare the Fed chair to an enemy of the state of a communist country?
Yeah.
I mean, I don't know if I was Jerome Powell at this point. That sounds like a little bit like defamation of character. I don't know if he's got a case there, but man, those
I
are
think he had a case a while ago, maybe.
well. I
I
mean,
think
but this really, this I mean, this that was like, ooh, that I don't
Yeah,
know, man. That made me feel
it's
uneasy, and I'm pretty laid back when it comes to
yeah,
you know to these type of jabs.
yeah. We're getting increasingly volatile in terms of rhetoric here across the board.
And whatever happened to Fed independence?
Yeah, it was gone, I guess, for the last couple of years.
Well,
It had been there pretty nicely for a few decades, and then it was gone.
so I mean, we are really coming into some uncharted water as far as the emotional level of presidential comments or public comments. I can't remember a time. Can you, Brett, where these opinions from any figurehead of any market. Maybe Putin had this kind of control over markets in Russia when there was all that turmoil going on. We weren't as deeply entrenched in it because we weren't there. But I cannot remember a time where there was so much hanging on just the words. I can't remember any president having this much this many strings like a puppeteer just for the market movement.
No, right. Yeah, I mean, this is all in uncharted territory. But to go back to your previous point, I don't know if you noticed a post I put up a couple days ago, or it might have been yesterday, either yesterday or 2 days ago. Um, the point being, I'm starting to sense in some of the Fed speakers a rebelliousness. And it just there's a little bit of extra emotion in Fed speak right now coming back, especially from the non-voters, just on the idea that they're going to do what's best for the country, and there's a lot of reinforced statements like that, but with a hawkish tilt, like with a little bit. I just wonder if the theory that a lot of people had 6, 8, 10 months ago, when we first started to see this dynamic of the White House kind of hammering away at the Fed, there was a theory going around that basically suggested that the Fed was less likely to cut because it needed to assert its independence, and that would be the reaction to pressure from the White House. And they kind of stayed the course and seemed to just sort of find a way to compartmentalize and ignore that and just do, maybe what one would call an unadulterated version of Fed policy. But the rhetoric from the White House has heated up so much since then, and particularly over the last 2 weeks, that I'm starting to sense a little bit of a rebelliousness from the Fed, and I wonder if it's possible that it's starting to impact what they're going to do, that they feel like on a larger time frame, even if like that there's such an importance in showing that they're independent by specifically not cutting rates, that could start to leak into policy discussions. We've started to see, as Trump has really kind of accelerated this rhetoric, we've seen the September Fed funds futures go from pricing in about a 35% chance of a double cut to now pricing no chance of a double cut and a small chance of no cut at all. And that has been from Fed rhetoric and from White House rhetoric, but not from economic data, not from anything independent. It's an evolution of the conversation going on between the White House and Fed voters and board governors from, to the public, out in the public sphere. What each side is throwing out there is starting to impact Fed funds futures, and not in a direction of more cutting. And I wonder if that's going to be a serious factor for the market over time, because I feel like that's starting to build, and that could be just another reason to watch out in this market.
All right, so we handicapped a lot of the risks that are associated. You haven't gotten involved today. Is that because you're actually on vacation and don't want to do anything,
No.
or is it just you're just trying to see how things shake out after all that we've seen, and I guess the
Yeah.
uncertainty as to what may happen this afternoon too.
I had an idea about today, and I knew what I wanted to see. And when China came out and did what they did this morning, and now this, it's changed. We're in a different universe now than the one that I was ready to trade. And the one that I was ready to trade was really nothing new from either side on trade matters, and Powell really laying out that yes, it's an easing cycle. It's not a one-off insurance cut, which I think he sufficiently did. And I think if we didn't have anything else in the picture at all, I think we would have been at 29.55 in the S&P into a substantial part of Powell, and then the goal was to look for the short. And I wanted the short following no headline drivers to the downside, following a headline driver to the upside, and then a market reaction that showed that there really wasn't much upside available in the market. And when you start to roll down from there, then maybe we get the evolution of other negative catalysts in the headlines, which really help you accelerate your position into the money. But you find your position, you initially establish it when it is really robustly established. You're up against the best version of what the market can offer, and it still can't offer enough to stop you from shorting. And that's a sound place to start a bear campaign. And then you get the headlines that help you, and it just accelerates that position. But it's tough to establish that kind of process in the middle of the weakest part of what the bulls have to offer, when they're really undermined and when they're really they're taken out at the knees by Beijing and Washington D.C. So it's a different universe now. I'm looking at this universe. Frankly, my instinct is to almost look for a long, because it may be the case that people are assuming the worst right now about what's going to come later. But then again, that rhetoric, hereby order, private entities, whether companies or citizens, a president hereby ordering people who put him in that office and who pay his salary and who can take him right out of that office. That to justify that rhetoric, it better be something pretty dramatic, or he's just I don't know what this means for his campaign, but I think that's a more significant factor than comparing Powell to the leader of a communist country. I think that I think you've jumped the shark here.
Oh,
And
yeah.
this is outside of the typical Trump rhetoric. To stand there and hereby order private citizens or companies to do something is a step too far.
Well,
So
here's
we'll see
the
what
other thing.
happens.
You got to figure he had his speech written a week ago. Maybe he tweaked it last night, but he's
Do you
not going to be
think
able. I don't know. Don't you?
this
Don't you
that
think?
speech? This speech sounds like an emotional temper tantrum.
No, 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 not Trump. Jerome
Oh,
Powell.
Powell.
So he wouldn't be able to respond to anything that just happened in the last, couple of hours before he's
Oh,
about
I
to
see
set the
what you're
speech. Yeah.
saying. Oh, I see. You're saying that Trump's response is because Powell didn't respond. He didn't call the White House after China's announcement and then reshape what he was doing.
Right.
Yeah,
So,
right.
I mean,
There's not a lot of theory of mind going on here.
I mean, his tweet was, "Hey, he didn't call me and ask me what
Right.
was going on." And I mean,
Right.
okay, we're supposed to have
But
Fed
this wasn't a
independence,
policy
right?
meeting.
I
This
know.
is an academic conference.
we,
You've
we
got a policy meeting coming up.
we have totally lost touch with what these things are. And you know what? Jackson Hole wasn't even a big deal until one time,
2011.
and that's where QE really kind of got
Well, that was
got
the QE2 and then
QE2,
QE3.
right?
Two
Right,
years in a row. I think
right.
it became the thing.
It's
And
QE2.
everybody since then has been looking for that next, bomb to come out of Jackson Hole.
And it
This
never
seemed like an
was.
appropriate time, but
And
yeah.
right, and it almost seemed as if Bernanke used that as okay, here's an explanation of how we're going to do QE2 because it's new. This is a new concept. We're changing how policy is, and I think it's important to, this is my platform to get out in front of the explanation so
It
that
was great, though. I mean, it was great. Like, for what he tried to do, it was a great version of that. It was, here is something that goes beyond the typical way that we can address things with monetary policy. And so we need to have an atypical solution for that, and here it is. Now, whether you agree with that solution or not is a different thing, but the way that it was approached and using that platform for that approach was terrific, and markets really responded spectacularly well. So
but now it's become a thing that it really was
Now it's
never
become a
meant
thing.
to be.
absolutely.
I mean, I know you kind of jokingly said, I don't know if it was yesterday or the day before, but you're like, yeah, no one's in the markets, right? No one's really paying attention. This is like the day before Christmas or the day after Thanksgiving.
Yeah, right.
So, and I almost
Empty
said
tape.
something back to you, like, hey, Jackson Hole was never a thing before.
Oh, I thought it was because we're ahead of Jackson Hole. Like the day before a Fed meeting, you don't
Yeah.
get a lot of participation.
Correct. Same thing. But I didn't say anything back to you because it just in my own mind, I'm like, gosh, where have things really come? Jackson Hole is now, it's become a thing that it was never, and even President Trump now,
Yep.
as treating it as if it was like some type of policy statement that he could have just on the fly changed his whole speech that he's probably been preparing for months. I mean, it's not as though this date wasn't announced a year ago. So anyway, how you
Yeah.
gonna trade? So you've
I'm
got.
Go
What
ahead.
what positions do you have on now? I know you're short euro still, right?
That's it.
All right, and so let me get this euro chart up because I know we had a few questions on what you're going to do with the euro and what your perspective is. You're risking 100 points or 100
Yep.
ticks on this one,
I'm about
which
halfway to the stop now. A little
right.
less.
So I have a daily chart of the euro up for those following along in your office, and looks like you were looking for, kind of that descending triangle breakout lower. Initially, we got it, but really hasn't done what you thought. So,
Well, what I thought was that we would probably see some. That's why I left the stop so wide and stay so small. So I think that if you look at the monthly chart of that market and you really focus on the the grinding channel that we've seen from, you know, basically the last 18 months or so, from the beginning of 2018
mhm.
until now on a monthly chart. To me, the next monthly bar that I see, and if I use my chart imagination, what I see is a bar that goes all the way down to those previous lows from 2016 and 2017.
Hmm.
I think that's the next monthly bar on that chart. To me, I don't see any way of escaping that. This is an escalator pattern. We are seeing increasingly vulnerable hands that will lead to a cascading acceleration to the downside. That's what I see, and I play with stops, and I'm happy to throw in the towel on something relatively quickly if it starts to show me things that suggest that I'm wrong. But still, I have a strong gut feeling when I look at that chart that that's what we're going to see, and it makes a lot of sense to me too. I think that everything that's happening right now suggests that the euro, particularly versus the dollar, is outperforming what should be the case, and probably because nobody wants to see the other part of that. The Fed may be easier than it should be, and there's certainly lots of rhetoric trying to keep the dollar in place. All these talks of a possible intervention and all sorts of stuff, and yet we're headed for what looks increasingly likely to be a no-deal Brexit. While we've already just seen a quarter of contraction in Germany, and probably headed toward a second one, so we'll have recession in Germany, and we're seeing a talk of stunning new policy tools being put into place by the ECB and trying to coordinate them with fiscal measures. I think that and let's not forget the possibility of renewed talk of breaking up the euro, because Italy is in a situation now where they want to use fiscal tools and they're watching Germany use fiscal tools. And they're the idea that Italy is constrained and forced to approach the situation like this with austerity when Germany is showing them the model of what Germans really believe is necessary in a situation when you need to support your economy, brings the whole picture of, well, then we want to devalue our currency back in, which is the argument for then we're leaving the euro. And I mean, when you've got an example of Brexit going on right now, somebody is leaving the euro, somebody else maybe wants to. That whole conversation gets back on the table. And I think that in a situation where you see the downside of the cycle in Europe, every time, forever, as long as there is a euro, and as long as they don't have a fiscal channel of solidarity, the way that they have a monetary channel of solidarity, you're going to see this every time we're in the down part of the cycle. You're going to see this risk of a breakup, and with Germany possibly heading into recession right now, I think we're at the downside of the cycle there. So I think that you're going to see that conversation come back on the table. So there's a lot of ways in which that idea of that next monthly bar makes a lot of sense. I don't know what that would spur from the White House if they're already talking about intervention now, because that's the other side of that chart is a parabolic run higher on the dollar. And that's certainly not what Trump wants to see as he's headed toward an election. So, it raises a lot of questions, and I don't know what's going to happen. But in my mind's eye, I think that this is a head fake to the upside. I'm contemplating adding right now, but I probably won't. I'll probably let it play out more and keep the flexibility of having such a small position and a wide stop, which will really just ensure. It's like when we got into the gold trade. On the long side in April, and I took it in GLD rather than the futures,
Hmm.
and I had a $5 stop in GLD. That was to make sure that I could be a part of it and not be stressed out about it until I saw it become manifestly the more dramatic version of what I was looking for. And at that time, I levered up in the futures market, and that was the right strategy for managing that position. And I think sometimes that's the right strategy. And I think that this is a similar kind of feeling about this market. Very different pattern, but it is ultimately the sense, just like with gold, I had the sense that in my mind's eye there was that necessary move relative to that big long-term ascending triangle. And we talked about that chart quite a bit, even going back to August of last year, if you remember that, around the lows.
Hmm.
So the sense of there's something that I feel needs to be on that chart, and in the gold's case it was that breakup above that descending triangle, and in the euro's case it is the waterfall extension in what looks to me like a type specimen escalator pattern on a large time frame, and that makes a lot of sense in terms of what's around the next corner for that market. Now there are ways in which regulatory moves and policy moves can truncate this experience of this market. If there is an intervention, who knows what, but I feel like it's going to find its way there. So I want to keep myself flexible, and I want to allow myself to kind of go through the process without being thrown off by short-term considerations, as there's things like today where we see something where it's odd to see the dollar going down on this kind of rhetoric, because usually it becomes a flight to safety situation. So I'd like to point that out as well. It's strange to see this reaction in the dollar. But there we go.
Did you say truncate or trumpcate?
Yeah. Right. Kind of the same thing in this case.
I know. All right, Brett. So, as far as gold, is there? I mean, you got the response that you wanted, and probably the response that you would have expected today. Do you have any thoughts on where we are? Is this fadeable? Do you think that is there any more opportunity, or is there maybe a breakout potential here that this thing could really start flying higher?
Of course it could. I mean, look at the rhetoric that we're seeing. What's on the table now? Who knows? What's on the table? I mean, you're starting to see, and I don't want to be political that much with this conversation, but it's hard when it has to do with something that is truly germane to market analysis. And it's not impossible that this White House administration becomes increasingly volatile as things start to look increasingly difficult for its next election. And that's something that I've thought about for a while. And we're starting to see a lot of high-profile media and politics personalities kind of jump ship lately. There's now two primary challengers. There was none several weeks ago. There could be a third coming, according to some announcements. There's a lot of high-profile things like Scaramucci coming out. He started a super PAC just to try to take Trump down. So you can see, I think that the people who were supporting him, who are maybe like a which way the wind blows kind of support, if the wind starts blowing against him, things could unravel pretty quickly for this presidency in terms of its sense of support. And with somebody like Trump there, it seems like that could lead to some volatility in terms of how he approaches things, kind of looking for that Hail Mary. And I wonder if, that has implications for how we should be looking at things, that, diving polls and diving approval numbers and people starting to jump ship and primary challengers starting to appear. There's sort of a blood in the water kind of feel. And I wonder how somebody like this responds in a situation like that, and exactly what sort of things we could start to see come onto the table. And gold, in the midst of something like that, where it's very unpredictable, the uncertainty level just goes through the roof. So I think that there's, even though I think the dollar's going to break out, I had my trade in gold. I got exactly what I wanted out of it. It can go right to 2,000. I wouldn't bat an eyelash. If it sets up short-term charts, I will have a bias. If it just tells me that's right. There's a lot of people speculating on gold right now, though, so it's a little bit tricky, and I am bullish on the dollar. So that makes it a little bit more tricky. But there's no way I'm going to short gold in an environment like this.
All right, and let's just bring it back to equities real quick here. It's really hard to handicap. Let's pretend though that we didn't have any type of expectation that there would be an announcement this afternoon. Based on what you're seeing in the chart today so far, which direction would you lean? Would you lean to the downside as a downside sell-off into the close?
Yeah. I mean, I don't know. It's a headline minefield, Jim. Like I look at, okay, just the chart vision idea. If I just look at maybe like 150-minute chart of the, let's say the S&P, it's It's now, if it turns from here and we end up with an announcement later today that's not that big a deal,
Hmm.
you have a bullish ascending triangle breakout setup. Like there is, you see the higher low on the 15th, and you'd be putting in another higher low now, almost in a slope line, and you've got a basically perfect flat line top for the last 2 weeks. And it's a big ascending triangle with bearish sentiment in the market. So it's hard for me to not look at that as a bullish setup. Just taking everything out of the equation, that's what we have. We have scared people and bearish market sentiment and a bullish ascending triangle in a longer time frame uptrend. Like that's what's there. But I can't buy this market. For the same reason why it looks like that. Because I think that when you see rhetoric like we heard, let's say he comes out and puts an embargo out there. I mean, I don't even know this is when we could have Carmine around, because I don't know can he do that? Maybe he can't do that. Maybe he can't just throw an embargo in there. I mean, in other words, stopping all trade with China. We would just be right into recession. The market would probably be down 10%. That would be an extraordinary step, and it would completely interrupt any notion of cycle. So it doesn't matter what patterns on the chart if something like that were to happen. I don't know what we're going to hear. I suspect it's not going to be anything like that, and I suspect that probably he can't do something like that without some kind of check and balance in place, which I don't think that he would receive support for. But he's got control of the Treasury. There are things that he can do that could be pretty dramatic. So I don't know what they're working on right now. They're probably working on something. I feel like this was a shoot first and let's figure it out after kind of situation. I'm not sure that they know when he put those tweets out, but they're probably scrambling right now to come up with something that justifies that language. And you can imagine that it's mostly Navarro and Trump and Lighthizer in a room talking about it, and probably nothing from Mnuchin, except that when he's brought in to be told what the Treasury is going to be doing. It's a hawk meeting, and it's coming up with something that's emotionally satisfying to Trump and justifies the type of rhetoric that would otherwise look like something that really doesn't belong in the United States of America. So we'll see.
All right, and then the last market I want to bring up is crude oil. Wow, did we have a pretty sizable move? And then we almost got to the point. It got about half back from the Chinese tariff announcement, and we got about half back, and then the Trump tweet came back out, and boom, we're now back right around session lows. Now, you were looking for a short in crude oil a couple days ago that just never manifested.
Didn't give me what I wanted pattern-wise, yeah.
Exactly, and I was trying to lay that out for our listeners because Blue Chip actually thought that you were indeed short, and I
covered right at the lows. I covered too early on the last one. In my imagination, I covered right at the lows. But that's what happened there, because I knew it. I just didn't execute it right. So it was still a good trade. But
now we're trading around the 54, and we had outlined a potential trade that you would have gotten long if we would have broke through a trend line, got through the $50 level, and then you would like it on the long side. But now we're really in no man's land for there, unless you're seeing something different. Are you able to give us any assessment on what you may be thinking about in crude oil?
I wanted to rebalance and set up a short. I don't know how interested I would be in the long side of it, but I would be interested in covering it, so that to the extent I'd be buying it, I'd be covering in the 47.50, 48 area if I could get it. But I believe that it will be exploring that area. I don't know beyond that, and so I would like that to be a situation where I understand a risk-reward relationship in that trade that makes sense. And right now I feel like I'd be risking about $5 to make $5, and that's a non-starter for me. So if I see first some kind of irrational squeeze, and we talked about the way that floor traders tend to manage this process, and you can see when you've got sort of obvious levels to check that they tend to have a really good track record of really kind of forcing into place some kind of irrational squeeze right in front of it that really resets the market in a terrifically advantageous position when you're into the guts of that market. And I kind of wanted to track them and follow them if they were able to pull something like that off. But again, the headlines step in and it changes everything. It's very much like the equities strategy is to get to a point where you have people hanging off the cliff on the bull side, before you turn and start to go against it. And we just halted that process and reshaped it into this where it's being battered to the downside aggressively without it really being maybe quite as vulnerable. So, all these markets now are in a situation where they could squeeze quite dramatically if it turns out that the headline situation isn't as bad as it looks. And you're just, it's just it's tough for me to be involved in a market like that on the short side. It's not the type of setup that I like to be involved in.
All right, so nothing really brewing in crude oil as of now. So you would probably like to see some type of headline pop. You were looking at something in the $58 range before. I'm guessing that would be skewed a little bit now, or are you just gonna sit there and wait for maybe that 57, 58?
It's time now. It takes time now. I think that it
Right, it
just takes time.
does.
It needs to we just need to sit here and then move a little bit higher and then waffle around and then get something else to bring it up to that area through the slope line. So the price gets lowered simply because, you've got a sense of a reshaping of exposure in that market when it's able to move through the sloped line that has defined the highs all the way through the downward trend line that begins, back in April, let's say, inside of this descending triangle pattern. Checks April, checks July highs, and moving through that, it's a sloped line, so as time passes, it's going to get lower and lower. But it really needs to get into a different place, in terms of what the drivers are, what people are thinking about, and then pop through that line and then roll back over, and I think that sets up the short. Otherwise, I think that it's just something that I'm probably not going to end up being all that interested in, which is I think it's a good feature of my trading to understand that.
All right, and then one last thing that I'm going to talk about, and this is a way to implement your own particular strategy with ChartTrader. And this is something that I've done in the past. And I'm going to bring the Euro chart back up for everybody because I think it's important. Because a lot of times, Brett, in the Euro chart, people may like to day trade. They may not want to risk 100 ticks on that trade because it's 1250. So if you only did a one lot and you risk that, that's 1250, right? If I'm not. So 100 ticks would
for
be
which? Sorry.
for the euro futures. It would
Yep.
be $1,250 if you were to take just a one lot on that one. So
Right.
what you can do, and what I've done in the past, is if you're confident in Brett's direction, and when he has a swing trade on like he does in this euro, then find your own particular setups that you like, shorter term, maybe day trading or short term swing trading setups that you like in particular, and ride that directional sense and use your own risk parameters, because at least you have that going for you, and you can use your risk. You can trade bigger than a one lot if you don't want to do that, or scale in appropriately. But here's a trade that he wasn't stopped out on. He still had the same conviction. He was actually almost thinking about adding to it, but he didn't.
Right.
However, that's a good way for anybody who was like, "Oh man, I don't want to risk 100 ticks. That's a lot for my
Sure.
account." And this is a good way for you to do it. So find your own particular intraday setups or shorter term setups with a defined risk that you're comfortable with, and then
Yeah.
trade along that way. And I've done that, and it's been advantageous to me. I don't always go out with those ideas and stuff. In fact, I this is probably one of the first times that I've even articulated that I've done that. But that's a great way to use ChartTrader's methodology and apply it to your own trading strategies and get some value add on something that you originally might have thought that's just too much for me. So anyway, I just wanted to throw that out there. That's something that I've done. I would think that you would be an advocate for something like that as well. No?
Absolutely. That's
So
good.
all right. Well, unless you have anything else to add, we were going
Yeah,
to bring
I do.
Carmine in. Oh, you do? Oh, well,
Yeah.
by all means.
Yuan is weakening sharply right now.
Yeah, you know what? I did notice that. I do appreciate you mentioning that. So what do we do with it? What do we do with that information?
This is going to make everything worse. I mean, it's the next. It's like they're announcing more tariffs right now. Like this is not a policy weakening, actually. This is the market doing it, but it's probably because the market is seeing that this is a logical step. And I would agree with the market on that. It's a logical step. So what does that mean? This is reducing the tariffs from the U.S. to China. It's just simply China announces U.S. tariffs aren't as bad. It's a policy move or the speculation of a policy move, but it's another thing for the White House to respond to. This is another affront as they're talking about this, and I would imagine that they see it. We're now past. I think we're now past the previous highs of the dollar yuan. We're right at them from the day when the market, when our market virtually crashed. It was in response to the breakout in the dollar yuan or the breakdown in the yuan, and we are now just really right on the verge of going to past the extreme from that day. So that's happening too, and it's important to note that. And the Global Times editor is out too. I don't know if did we post on this that Hugh Xijin. I don't know how to say his name. Xijin maybe, who seems to be kind of the mouthpiece for Beijing, is basically saying, yeah, the way they're looking at it is that they're just the U.S. agriculture has nowhere to go but China. They're going to cut off that. So it's more threats. So it's just amplified threats back and forth right now.
I once thought that maybe this was a chess match. It's beginning to look a whole lot more like checkers.
Or boxing.
Yeah, yeah. Well, I was thinking about boxing, but very low grade.
Yeah, this is MMA at this point.
Not. This is just kind of a, couple of middleweights just going at it. Instead of a technical bout that we would like to see, but whatever. All right, Brett. Well, thanks for getting us your perspective. If you do have anything, feel free to jump in. If not, enjoy your little vacation.
Yeah, this is a great vacation.
So, all right. Well, I know the listeners appreciate that. I appreciate it. It definitely helps give us something to kind of chew on when we're struggling with how to quantify all this stuff.
The sad fact is I genuinely enjoy it, so it is a good vacation. Honestly, that's why I do what I do. This is interesting stuff.
It is, and I guess you'll be more prepared when you come back. Are you back like next week?
I'm doing a thing where I'm taking each Friday off for a little bit.
Oh, okay. Well, so, I don't blame you. Usually, that's a really good strategy for summertime. But
just a number of 3-day weekends was the idea, and it's a good. I've got 3 2-year-olds. I'm not going to do a lot of traveling, so.
I hear you. All right. Well, I'll tell you what, man. We will have you on next week and get some more perspective. I'm sure we'll have something to talk about from over the weekend. So, as always, though, Brett, thank you so much for joining us, and feel free to chime in at any point today.
All right, you got it, Jim. Thanks.
All right.